Just a couple of things to tell you about here. Some bullish calls are out of the markets right now. Equity strategists at Morgan Stanley expect the momentum to continue near term. Laura Wang and her team about 2 days ago put out a note. In our inboxes yesterday, James Wang and the UBS folks have come out and say we're probably less than halfway through the current run. And at JP Morgan, strategists say another tactical rally in China is driving upside in Asian stocks.
Yeah, that's right. I mean, meanwhile, Bank of America Global Research says DeepSeek's rise to fame could have the same impact as Alibaba's 2014 IPO. That moment, more than a decade ago, inspired the creation of new economy companies, created broad-based optimism, and attracted billions in foreign capital. Now, here to discuss their latest report is BofA Securities China equity strategist Winnie Wu. Let's start with that. Just lay out the thesis here, I suppose.
Yeah, we think, DeepSeek could be potentially an inflection point for the China market from a 3-5 year perspective, right? So it could be a structurally very positive thing because for the past few years, what were investors frustrated about or worried about China market, right? Short term is the concern about property downturn. Is that leading to Japanification, hard landing, financial system meltdown? I think that concern has gradually faded away, right? But for the past year, it's also deflation, overcapacity, all your new economy sectors like EV, solar panel, are they going to be really the real growth driver? Can they create enough jobs, right? Because advanced manufacturing doesn't create that many jobs. So concerns on deflation, on the sustainability of export driving China's growth is another big concern. So come back to the question long term is, what's going to drive China's growth and productivity? If it's not property, if it's not export, what's going to drive China for whatever 3%, 5% GDP growth? But since 18 months ago, we've been saying that, hey, this cycle may look like 10 years ago, right? Between 2011 to 2014, global investors also were very frustrated with China market. MSCI China was bouncing around 60 level for 5 years, no performance. And what drove the China market turnaround in 2014 to 16 was one, policy stimulus, right? Rate cut, property easing. Second, structural reform. There was the LGFV debt swap, and there was the supply side reform. But most critically, there was the rise of mobile internet technology, the internet sector. For global investors, this was a brand new investable new economy sector that bring back long-term capital back to China, not just to play a policy stimulus, but really there for a 5-year growth story, right? And the final critical point of technological breakthrough is the harder one because policy is within control of policymakers. But technological breakthrough is not something you can predict. It's not linear. So we've been waiting to see, is that going to happen? Is that going to happen soon enough? Especially this time, the bigger challenge is, the technological decoupling, right? The export controls by U.S. Can China still achieve that kind of breakthrough? But I think with DeepSeek, suddenly people are re-evaluating their assumptions of, China will be left behind in the AI era, right? That the whole AI development will be dominated by a few U.S. tech giants. So I think DeepSeek showed the possibility of China's continued development in the AI era. It shows that China's private sector remains to be very innovative and competitive. And I think it potentially showed that China could take advantage of AI to drive productivity gains, to drive growth, drive prosperity, and bring back the long-term capital.